A
birthday celebration over the weekend, a nice Belmont payout, one big week in the markets, CPI, PPI, Fed meeting, quad witch, analysts getting cocky ahead of Oracle earnings. And I'm back. What more could you ask for? It's pre-market prep this Monday. Let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're in the green by 11.5 handles, 43.60 and a quarter. All we care about is taking out Friday's high at 69.50. The buck is down 13.8 cents at 103.39. Bonds flat 127.5. Crude getting tagged down $1.61 at 68.57. Gold showing a little green, up $1.20, 1978.40. Silver going the opposite way, down a nickel at 24.33. And Bitcoin, we're just hanging out. We're down $425 at 26,050. Do you have the birthday song ready, or did we talk about this, or did you guys talk about Dennis's birthday on Friday?
Come on. You know me, Joel. Always ready to go.
We don't sell.
Happy birthday to you. Happy birthday, Triple D. Happy birthday.
Happy birthday. Happy birthday.
Okay, enough.
Blow out your candles, man. That's
you
what I
don't
was waiting
celebrate
for.
birthdays when you get this old. I'm approaching 50, so you don't celebrate birthdays when you get this old at all. You do celebrate them with butter tarts, though. If you looked over my Twitter over the weekend, I went to the butter tart festival, and definitely the 220 calls are in play here, Joel. The 220 calls.
Oh yeah, I can hear.
0 days to expiration.
And if I would have known that it was your, I mean, I did know that it was your birthday on Saturday. If I would have known, I probably even would have went heavier into Belmont. The first time I don't write an article, maybe in like a dozen years, because I was out of town. I don't, and I just want to tell you, did anybody watch that race? Mitch, did you watch it live? Did anybody watch that race?
Unfortunately, I took the night off.
Well,
it was 7 o'clock.
I just want to tell you, you're going to go back. That was one of the worst calls by an announcer.
Wasn't good?
That I've ever heard in my over 55 years of watching horse racing. And
he just wasn't into it, or what?
Well, he didn't have it right there. Wide open Belmont. This is 3 minutes before post. Right.
Joel gave you the horse 3 minutes before the race. So he may not always get the stock picks right, but sometimes he gets these horses right, man. I tell you, you got that horse right.
And it went off at like 7-1, and the $2 exacta paid $68. But you go back and watch that race, because I was keyed in on my horse the whole time. He got off good. He was on the rail. He worked his way up, and the race is 1.5 miles, right? So they come to the top of the stretch. It's a 1/4 mile, and I'm sitting there to Lisa. I'm like, my horse is going to die like a pig. He has nothing left in him. And she's like, no, I think he's going to do okay. And the favorite kid coming up on the outside. All right. So now it's a 1/4 mile left. And I'm like, there's got to be an 1/8 mile left. The announcer doesn't say anything. I'm like, where's the wire? Where's the wire? He didn't even say like 500 feet or anything.
Joel announcing these things.
Oh, I could have announced that thing. I don't know who that guy was, but I'm like, what, where's the wire? They usually give you like, they count down the feet and everything, but I'm back. It was.
So how'd your horse? So it wasn't doing that great to start. How did it pull it off?
No, it did okay. It got off. It was on the rail the whole time. Yeah. It got on rail the whole time, got boxed in a little bit, and it stayed on the rail almost the whole race. But like, he was third, fourth. boom. And then he took the lead. And then I think the announcer just thought Forte was about to, was going to catch him. And he just hung on. He took the lead at the top of the stretch and just kind of hung on. But let's talk about the week in the markets here, Dennis. We have no clear resistance in sight, really, on the dailies. We have CPI, we have PPI, we have a Fed meeting, and we have quad witch.
Yeah. So we have a lot of non-earnings on we don't have a lot of earnings stocks. We do have Oracle, which we'll get to in a few minutes. But I mean, Tuesday's CPI report. This is the report. We say these are important, but it's very important because this market has priced in major disinflation here. What are the expectations, Money Mitch, here for CPI looking at tomorrow? I know I'm throwing you under the bus because we had a schedule here and we're already off the schedule. But looking here, CPI tomorrow morning, the number's supposed to go down significantly here from the previous month. I'm skeptical it's going to go down that much, but what are the expectations here?
All right, just give me one quick second. All right, expectation is 4.1% year over year. I got you. Tuesday's expectation here is 4.1 overall in the year, down from 4.9% last month. So expected to go down 0.8%.
They're expecting major disinflation here. So what that means is prices only going up 4.1%, not 4.9%. It doesn't mean they went down, but they're not going up as quickly. So now this brings me into the conversation. I want to show a tweet from me. You show a tweet from Joel, you got to show a tweet from me. So on Friday, it was Thursday. I needed to buy some sunscreen for my kids on the weekend. I go to the superstore and buy my sunscreen, which I always do. Banana Boat. I like the Banana Boat. It's a good product. And I noticed the can, and I'm like, it's the can on the right, the new can. I'm like, this can looks smaller than it used to be. Sure enough, I come home and I had an old can, and I put them side by side. Noticeably smaller container, but maybe they just, made it a little bit different shape. Oh, no. Banana Boat reduced the size of the container from 170 grams down to 141 grams. Same cool price. It was $8.99. But 170 grams to 141 grams. So multiple questions here, even for the chat. And I don't know if anybody has the answer, but I believe the CPI does not capture this 20% increase in price because that's what this really is. Even though the price did not go up, and CPI might show, oh, look, Banana Boat sunscreen did not go up in price. They actually increased the price by shrinkflation here by 20% because they're giving you 19% less product. So now they're on the 141. So it's 20% increase in price here from the 170 down to the 141. This is the sneaky inflation that we've always had. And the CPI, I believe, does not capture this. This is a significant increase in price here, though. So Banana Boat, if you're listening to this podcast, reach out to us. Let us know why, first of all, the management decision to decrease the size by 20%. 2, why did you not decrease the price then as well? Because you're giving us less product.
I know why.
This is inflation that is sneaky and I believe not captured by the CPI.
I know why. It's because they're trying to keep us off the Banana Boat, of course, baby.
Oh, what did he do? What did
you guys
create
that? Baby, we riding out there.
Who's the girl in the back?
Out there.
Is that the Banana Boat girl?
Yeah, she got us all on it. You could see it. You could tell Joel's been working out. Look at those legs.
Joel, nice legs. Anyways, that's my pet peeve. When I go in there and you see this, you guys know what I'm talking about. This isn't just Banana Boat. This is everything. They're giving us less product. So it's not only that they're raising the prices on us 4% or 5% or whatever it is, they're actually giving us less product. And this is a 20% increase in price. Federal government, CPI, whoever you guys are, account for this because I don't think they do.
Well, maybe they could give the report and they could say excluding suntan lotion at the superstore in Canada.
Yeah, except Canada.
Well,
if this decrease the price 20%, I don't have a problem with it, but they didn't do that. They didn't do that.
I don't know who it was, but this is going to be the last month for good, to have a positive comparison because we were screaming so high at this point a year ago, right? It was out of control. So this is going to be an easy comparison. or more favorable, to look on a beat. I mean, also, I mean, that's not the only thing. At CPI, PPI, you got the Fed. The Fed pause.
The Fed.
The Fed's gonna pause, but
What's
they might go up.
throwing Mitch under the bus here again. What's the odds of a Fed increase? And this is Wednesday, is the Fed decision?
Yes.
Wednesday?
Yes.
I believe I saw something in the 30% range for an increase.
I saw 35.
Not too bad.
35?
I'll say it the opposite way, right? The likelihood of the Fed will pause rates in the June meeting will be currently standing at 70%.
Oh, there you go. So yeah, so
30%.
Mitch saying what the market wants to hear, the pause. So there's a high likelihood they pause. Market is pricing in a pause. Market is pricing in no inflation ever again. Market is pricing in a perfect world, or the market just doesn't care and is going up anyways. I think it's more the latter. It's the FOMO. I have FOMO. I have FOMO too. Somebody said, don't, fall for, this, fake rally here. And I'm like, I've fallen and I can't get up because I've fallen for this fake rally because I've been buying stocks on pullbacks here too. Can't help the tape's going higher right now, at least. We'll see if CPI pulls the rug.
Let's just be honest. The AI bubble doesn't seem to be hurting it. Let's just say that much. Let's actually go.
Yeah, that gives them I was thinking until seeing these statistics that, wow, with the market being up like this, they could be tough, right? That they have a big cushion, but right now that Fed tool has been pretty accurate. And I think
it depends a lot on the CPI tomorrow. If they show a little bit hotter number, that'll change in a hurry. So it's nice that they got the CPI data right before the Fed decision. So I'm going to say everything matters tomorrow on that CPI print. 8:30, folks. Be here.
We'll see what happens there. Let's get to some of those AI topics today. We do got, of course, two topics that I want to talk about.
Sure.
First one, let's go to Oracle, as they got an upgrade here and also have earnings tonight. So this analyst definitely stepping up to the plate. Wolf's Research upgrading Oracle to outperform and announcing a $130 price target here.
Crazy.
Will Oracle get the jump before the earnings?
Oh, it already has had the jump. And again,
unbelievable.
We talk about this play. We give you this play. Buying stocks ahead of the earnings reports is working. Look at this one. 3 days ago, it was 105. It's 114. I'm not holding it through the report. I wouldn't be holding it through the report, but I've been trying to play it long a couple of times here. I would have been long probably over the weekend, but I took Friday off for my birthday. So Friday night off. So I did not have any positions. Like, I'm getting flat, so I don't have to worry about stocks. Coming in here, I was like, why did I not just at least buy Oracle and just forget about it? So anyways, congratulations to those who are long right now. I don't like holding through the reports, but again, alpha being generated, being long these stocks ahead of the reports.
Yeah, I think a couple analysts maybe hopping on this bandwagon. 115.41 stands as your pre-market high as we speak. Some decent volume being traded too, so I would keep an eye on that. If you're looking for a gap fill, 110.15. That's on that's the top of the range. That was the all-time high from Friday. The close at 109.85. We've seen Oracle do this, run into the reports and absolutely fall on its face. The Lululemon, I'm just going to equate this to Lululemon. I was a little bit overzealous in the pre-market when I'm like, you just got to sell this thing today. I kind of feel the same thing about Oracle. If I had a large position,
you don't want to hold through the report.
I would be selling half during the day, and then if it popped, I would be selling more. And if it went down, I'd be selling it too. That's the only thing I can think of is sell. So it's probably ready.
I don't like holding a trade through the report. An investment is different, but if you've gone on for a trade and it just went up 7, 8, 9% in 3 days into the report, it could continue to go, but
it's Oracle too. How many times have you seen this from Oracle?
It's a big move for Oracle. Oracle's a lower beta, but again, I guess they were bought some AI company or something that chat's talking about. I didn't even see that headline on it. Maybe Oracle's the AI play too. They all got to get into AI, Joel. Database.
I mean, Oracle, yeah, definitely. I would view it as an AI play. Let's just be honest. Anything customer service related, anything SaaS related is going to have AI playing into it.
Related is apparently now an AI play.
I mean, you can also hear it we got a lot of talk from Salesforce, right, about how AI was going to play into this. And I think that plays really close to Oracle's game. So,
yeah. Salesforce
I'm coming back with
Friday.
a little bit softer view on AI after being gone at the end of last week. I participated in some AI.
What did you do?
Well, I did a couple different things. We were out in Olympic Park in Utah where they had the 2002 Olympics. And you couldn't do everything, but they had one thing where you could do a simulator of like bobsled, ski jumping, and all these different things. And it wasn't too bad. But the best thing is you could do, like those big ski jumps. You could do a simulated jump.
Did you do it?
You had to do your balance. Oh yeah, and you know what? I actually, because you look at those guys like they lean down, and then they jump, and then they land. I actually jumped farther than Lisa on the simulator, but it was fun. I crashed a couple times, but I do have to admit I chickened out on the ropes course.
On the AI ropes?
No, real ropes.
Oh, real ropes. I was like, you chickened out on the AI ropes.
No. The real ropes course. I went through one thing, and Lisa, the other people who were with it already went. And I said, and then the next thing was walking over this log. I mean, you're hooked in. So the worst thing you could do is like fall and dangle. But I am like, there ain't no way I'm going to be dangling out here in front of 300 people. So I did the first rope course, and I turned to the person. I go, I'm going back. And they're like, what? And I'm like, yeah, I'm not doing this. And then so some people that were behind me, they had to go back too. And then I'm glad I did it because Lisa did it, and she is a lot more coordinated than me. She was absolutely exhausted. So AI, I'm softening up on my AI position.
So you buy an AMD?
Oh, man. Are you not selling it is more important. I can't believe you held on to this one for so long.
No, I know. Usually I sell quickly, but I've not sold any. I told you, I don't know last week, but so it's 35% of my kids' RESP is AMD. I'm heavily weighted in AMD in the RESP. In my long-term portfolio, it's less than that, but it's a few percent. It's a few percent. So it's a fairly significant size position for me, and it's getting bigger by the day, getting bigger here today. Why is that, Mr. Mitch?
Yeah, let's talk about that. So I got some news this morning, and this came from Moomoo US, is that I think it's a very important one. A lot of people are talking about the upgrade on price target today, raising the price target to 110.
Who was that?
From 110 to 150. That was KeyBank. But I think what's very important here is I did get a note here from Moomoo this morning about an AMD special AI event. So tomorrow, AMD is hosting a special AI and data center centric event led by CEO Dr. Lisa Su. During the event, AMD will talk about the Instinct MI300A chip, which promises an impressive 8 times increase in AI performance, a 5x enhancement in performance per watt. So look for them to talk about their chips and how they can play into AI. And of course, the focus AI and data center centric event.
These stocks do like to run up into these events. One issue you've got with AMD is it sold off and just came back, and there's a big level here. 130 is huge here. So there is some major resistance. It's going to challenge it here this morning. Can it get up and over it? I don't know. We just came from 117 2 days ago. So it's a big move, really fast, but you do have some resistance. I'm holding on to my AMD. I put it in there. I think 3 years from now, AMD is a hell of a lot higher. So I'm sticking with it.
You got to sell there at 129. That is
129 ahead of the 130. Somebody's stepping ahead of the 130.
Yeah, just they're just like, hey, I want to sell like 87,000 at that level, so they're just sitting there at 129, just below the pre-market high. Looking on the dailies here, you're trading up 363. I think it's really important to take out that pre-market high and then challenge the high on Friday. That's above the high on Friday. So if you're looking for potential support, the top of yesterday's range was 127.25. That's not too far away for a gap fill. And then actually the high was made last week at 130.79, and I think that closing high. The closing high for the move was made on Friday as well at 124.92. I think on this one, I mean, instead of trying to pick a top, and we've talked about this a lot of times, just trail that, like put that metal stop in there. And if the market starts to turn around and go down, we know the beta on AMD that it will go down more to the market.
Yeah,
or
for
go up more
sure.
than
And
the
I mean, it's
market.
been a good run. Again, we had the little pullback though the last few days, the check back, and this was all these stocks, the AI pullback, you could call it, Nvidia pulled back, and Nvidia is still down from where it was, but we've had a little pullback here. Now it's starting to run here again though, so we'll see how it does at 130.
One thing that I would state is I did confirm it. I pulled it there straight from the AMD investor there. So I did confirm. This is the news that not many news are reporting right now. So we'll tell you that right now. This is a little bit of a sneaky
events,
under the
people
radar
buy them ahead of these
headline
events
right now. So keep an eye on it. Who knows? This could give it a little bit of a lift. We'll find out.
Don't get appled. Don't get appled.
And again, you got to be careful.
You got to be careful, of course.
With
like
$3,500 goggles, sometimes they pull the rug out from underneath them.
Yeah, I think with chipset though, at least today, we all want to hear what AMD has to offer. So
I'm excited. Watch out on those
bids. It's an AI event. I've been saying I think AMD is a catch-up play with NVIDIA. That's why I'm long it. You're getting it for what is the valuations? I think it's about half still because NVIDIA's run. Let's just go take a look at the valuations here. You can go in the Benzinga Pro here for this information, obviously, as well. And, I just go into AMD and I go to details, and you can get the forward PE and you can get the current PE. So the current PE, you're going to see 657 because that's why current PEs are not good. Forward PE is now 44. It's come up substantially. When I bought it, it was around 30. So it has come up a lot. I don't like paying 44 times, but I didn't mind paying 30. I mean, NVIDIA is in another planet. So NVIDIA's PE, current P is 201. Well, they got the forward PE only at 52. So there is catching up slowly. It has been catching up a little bit there. The reason the NVIDIA PE didn't go up, though, because they had that earnings guidance raise so much.
Yep.
What if AMD bumps up their guidance sometime, too, though? So
hey, Dennis, watch your bids
definitely
here.
I liked it better at 90.
Watch your bids. I don't know what's going on here. I mean, it's not it's just we're leaking.
We're gapped up, right? And it seems like we're starting to get a little bit.
Man. We just
is Intel still the bargain? Let's just stick with the chip talk just for one more minute here because EKS are saying he thinks Intel's a bargain.
Yeah, let me get a comment in and then we'll talk a little bit of Intel in. All right,
sure.
Sounds good, Dennis. So one thing I definitely want to tell us about is a little bit later today, of course, we'll hear all about from Qualcomm's AI. So don't miss this chance to stay ahead of the curve, secure your future in the fast-paced world of AI. Stay tuned later today, right here. 9 a.m. for this electrifying interview with Zad Asgard, the visionary driving Qualcomm's AI revolution. Catch the next big AI stock only on Benzinga. See you there, guys. We'll see what happens with Qualcomm.
That's right after the show.
Yep, just right after that, guys. So
will they, if they stay on the show, will this go straight into, or are they going to have to go to another?
They don't need to go anywhere.
You don't
stay
need to go
right
anywhere.
here.
Stick with us. We got Qualcomm coming up right after the show.
And I do still have a piece of Intel, still have that from 3093.
Nice.
I've talked about it. It's become sexy for me now with just one mention of NVIDIA. Are you guys taking a shot?
Well, I've been in, and me and Joel have both been in Intel for a while. You're fully in, aren't you, Joel? You bought Intel a long time
I've had
ago.
it for a while.
Joel's bag holding Intel. I'm almost back to even on Intel because I had bought in the low 30s. I think I bought around 33. But what I did was I wrote covered calls, and they're expiring in 5 days. So I have a decision to make. I can cover in those calls and keep the stock, or I can just let the stock go. What should I do here, chat? We almost should let the chat decide. Do I cover the calls, then keep long Intel here? It's been such a dog. Or do I just let it go? I wrote the calls about 3 months ago, picked up $2.
One for writing the calls, two for letting it go.
Do I buy the calls back, or do I let the stock go? Because it's in the money. It's going to go. Unless Intel collapses here in the next 4 days. The question is, let it go. So we got some, it looks like we got some Frozen fans here.
Let it go. Let it go.
So I forget. Is it 1, let it go, Frozen, let it go, probably cover, let it go. 2. So 2's let it go.
There's the 2s. There you got some people.
Is 2 let it go?
No, 1 was let it go.
Oh, man, this is mixed. Look how divided the chat here is.
That's why they call it a market, right?
Dennis, you could. What was your original plan? Just to ride it out?
There you go. I like it,
My original
Joel.
plan was Intel got too cheap and I was going to hold it forever. But then I got mad at it on that last earnings report when it went down. Then it bounced. And when it bounced back, remember I had the bad earnings report the last time? And then it bounced back like 3 days later. I was like, I'm writing calls on this thing because it's probably going nowhere.
You know what you
it
should
pretty
do?
much did go nowhere, so it actually wasn't a bad call. But
I think you should cover the calls and buy more calls.
You're bullish. He's full on bullish Intel.
Yep.
Cover the calls and buy more calls and keep long the stock.
And sell
Double
some
long.
puts. And sell some puts.
Oh, we got a decision. I have 4 more days to decide. So
the hamster wheel go. That's
Yes.
for sure. We'll see what
the
happens.
chat was very divided, by the way. I think it was even.
Yeah, definitely. All right, let's pivot over to the let's go to the cruise lines. This has been an interesting conversation. Let's talk a little bit about some cruise lines as JP Morgan's analyst Matthew Boss upgrades Carnival today to overweight and raising price target to $16. I got some bullet points here from the latest in the industry. So this was given by a report by JP Morgan. This said that North America's recovery in travel market is strong, with bookings surpassing 2019 levels. Now, when we think about different areas, international is still struggling a little bit. Europe travel market is improving. Australia's recovery is estimated to be about a year behind, and Asia about 2 years behind. So here in the United States is going well. And according to the survey by Morgan Stanley, agents reported also strong momentums in booking and month-on-month increases higher than levels compared to pre-pandemic levels. So definitely let's focus on this, because right now the price advantages of cruise over land-based vacations is seen as a positive factor for the industry.
People want to do stuff. We talked about the airlines. I'd rather own the airlines.
I sold my Norwegian, man.
I'd rather own the airlines than the cruise lines. UAL has come all the way back. We talked about this at 45, 46. It's back up to 51 almost. It's come back. American Airlines hooking, starting to look perky here. The airlines look pretty good. Again, it's hard to take positions on ahead of CPI because that can change everything tomorrow morning, and the Fed decision obviously Wednesday. So big macro moves expected here in the next couple of days. But if all goes well with CPI, people want to do stuff. This is where people aren't cutting their expenditures. They want to go on trips. They're not. We're in this YOLO still mentality here, and it's like, I haven't seen things. I want to get out there. I want to do stuff. I want to go places. That's good for the airlines, and that's good for the cruise lines.
Yeah, I can verify that. Just absolutely jammed at the airports.
That's busy.
At Delta, I mean, just I don't even want to jinx myself. I mean, just incredible. On time, early. I mean, they got it down. You know, they don't mess around with food anymore, but unless you sit in first class. But holy mackerel, what a move. CCL, Dennis, how far can you see the book on this? Because I would say, man, we haven't been up to $14.
It's littered with offers up here.
Yeah, boy. For this one, I would just be looking at the 14 to 14.20 area. I mean, this is a big move, almost 6%. It's big volume, but you're going to have a lot of stock to take out in the book. And then I look at this high from last year in June at 14.20. So, I mean, for me, I'm not buying. And if I had it, I'd be 14 to 14.20. That's like 5-star for resistance today, especially, I mean, up 76 cents. RCL is getting a bump on this too. That's been a nice move. So keep an eye on your pre-market high. This is coming up on your post-pandemic highs.
That's impressive.
Unbelievable. It is.
We had the tip off when Mitch got back from his cruise.
CCL.
He
Look
was
at the
saying
date.
it was busy.
The date was
May that
1st. May 1st. Look at CCL on May 1st, and look where it's at now.
Telling you, Mitch told us on this show.
But I played it that day.
Eyeball test.
Eyeball test works. If I could
played
go
Norwegian
Utah right now, I
Carnival.
would, just because Joel said it was busy. That works.
But another thing is RCL has gone pretty far since then also. So this move is getting extended.
And that's what I'm going to say too.
So be careful.
The easy money has been made in all of these stocks here now. The easy money has been made in RCL and CCL.
Look at that.
You need a check back, a pause. I don't like chasing. You are hopping on a moving train. And when you hop on a moving train, a lot of times you fall under the tracks. Believe me, I know.
Yeah. We'll see what happens if they can stay strong. And I do agree with you watching the airlines. I think a lot of that airline has to do with probably oil maybe making an impact. Let's talk a little bit about crude prices falling on the backs of U.S. and Iran talks on a temporary nuclear deal that would allow the Islamic Republic to export more crude oil. Of course, oil coming down here. Will this play a positive effect on the airlines? And then, of course, we can kick it to the oil stocks themselves.
Well, multiple thoughts here. One, oil's trying to break down new lows. That is good for CPI. It wasn't a great month for, looking back to May, I guess kind of oil was down slightly maybe in May. One thing that just bothers me here, though, is the pump prices are not coming down. I mean, I see oil prices going down. I had to go and buy gear lube for my boat. And there was a 1 liter container. Guess how much the gear lube? 1 liter Canadian dollars, but just one liter little container. Probably the main ingredient gear lube is oil. 1 liter. Guess how much it was? Just take a wild guess. Mitch, I'll let
50.
you go first. Well, that's crazy, but not 50. But
I don't know the Canadian dollars. The US
it was at the marina is always higher. It was 40 at the marina, and I was like, "There's no way I'm paying $40." So I went to Canadian Tire. And it was still $30 for 1 liter of gear lube.
Ooh.
$30.
And that's a
that
liter.
was like $10 3 years ago. It's 30 now. And you know what the guy says to me? Well, have you seen the price of oil? And I was like, indeed I have. And oil price has been coming down. Why is your gear lube price going up? That's my question.
My question to you is, did you do any arbitrage?
I should be shorting that gear lube and buying oil.
No, you should be buying whatever that stuff is
but the gear lube price can continue to go up because it's retail and they charge whatever the hell they want.
You should buy it at the store.
Beer guy says it's probably a smaller liter.
You buy it at the store and then you sell it out of your car at the boat dock.
Yeah, well, that's what you could do. I go buy a Canadian Tire and then I go over to the marina and I have gear lube here. They're charging 40 here. It's $35 out of the back of my car.
This guy has a sign up out front of his house that says, like, come on in and get oil.
Gear lube, like a lemonade stand. I set up the gear lube stand. Pops out the back of the trunk. Gear lube. $35. I make $5 a thing.
Those Canadian boys, they got you ready. Dennis, come to him. He got the oil ready for you.
Should we just have my oil rant ready every time about what I say about oil?
Please rant away. You have 2 minutes before Tim comes.
No, we don't need 2 minutes of this. They're pumping like OPEC, whatever they say. Everyone is pumping all the time as much as they can. They're getting it out of the ground. No, don't believe what anyone says. Don't believe OPEC. Don't believe Russia. Don't believe ExxonMobil. They're pulling it out of the ground, and they're not. And Dennis, to your point, why not, man? Let's just get it out as fast as we can. Oil is breaking down here. We are down $2 at 68.18. I don't know. I mean, I've talked about the average price of oil over the last 15, 20 years being $50-60. And that is where it's going. I don't know if it's good.
I'm with you, 30, Joel. 40, 50% higher than where they were when oil was this price 3 or 4 years ago.
Because they love to make profits.
They got to be making a lot. That's how long this should be long. I guess all these oil companies still.
They're greedy, Dennis.
But they go down. The oil stocks suck.
They are
the money down in. Everything that I've bought in the last 6 months, I'm up in, except those oil stocks.
What about Warren?
Because of Buffett. Thank you, Buffett. But I bought that PXD. I'm down in that thing too. That's no good.
Yeah,
but then you got, the opposite story here. Obviously, everything else. So, anyways, let's go grab Tim. Get Tim's thoughts here because we've talked a lot of different sectors here, and we know Tim's got his system that cuts out all the opinions and just looks at the numbers. We like quantifiable systems here.
Let's take a look, of course, underneath the hood of Market Structure Edge. What's going on, Tim? How we doing?
I'm well, thank you. How are you guys? What did I miss this morning?
We're complaining about prices of everything. I'm complaining about the price of sunscreen. I'm complaining about the price of gear lube. I'm complaining about the price of the oil, of the gas at the pumps, because I see oil coming down, yet all these products that use oil going up. What's with that? Why do these companies want to make so much money off of us, Tim?
I think we call it the profit motive, Dennis.
Capitalism, free market capitalism. Supply and demand, and they don't care that oil has come down. They're not lowering those prices. They raise the prices at the pumps.
Well, and and to be fair to the producers, the whole thing from upstream to midstream to downstream, where downstream is the service station, the gas station, the petrol station, midstream is transportation, upstream is exploration and production. Look, their input costs have gone up too. They're no different. They're no different from us. Yeah, their labor costs have gone up. Their equipment costs have gone up. Everything's gone up. So it becomes harder, I think, for producers to adjust the price at the pump to oil as a result of that. You know, it gets to the central question of the week, which here in the U.S. and knowing that you're peering just across the border, Dennis, of what the Federal Reserve does. You know, had they been serious about addressing inflation, rather than leaking out changes over 2 years, why wouldn't you just hike rates to 5%? I mean, if you really wanted to stop the use of credit infusing the market with higher prices, inflation is always, always, always about money. It is not about you, the consumer. You don't create inflation. We don't need to slow you down. The economy does not overheat. There is no such thing. There is only too much money chasing too few goods, and it happens in two ways. There is credit, the ability to borrow things and buy stuff. And if you have zero interest rate car loans for 7 years, that is infusing inflation into the system. And then fiscal and monetary stimulation, where people get checks for sitting at home. Those two things create inflation. So if we wanted better, and I was traveling over the weekend and paying almost
you were traveling again. Stop.
Almost $5 again. Well, this was not.
Where were you this time?
It's not sad, but it's a fact. So my mother passed away. So I was
sorry to hear that, Tim.
I was delivering the eulogy at my mother's.
Sorry to hear that, Tim.
Thank you. So I was in Spokane, Washington, and gas was pretty close to $4.80 a gallon there. I don't know what it is where you are. It's quite a bit more than here in Denver. But that to me is the problem, Dennis. And how do we fix that? That's very simple to me. If you set interest rates at a reasonable level and left them alone and let the supply-demand equation sort itself out at the commercial level, and if you fixed the value of the currency and adjusted it only to expand according to output increases, we would have, in fact, we would probably have prices that would come down, because as we introduce things that should improve efficiencies, like generative AI, I mean, that should improve productivity. If you don't need as many people to do things, then prices should overall come down. It happened from 1800 to 1900, by the way. The consumer price index equivalent from 1800 to 1900 in the US came down 50%. And it's because the value of the currency was fixed. So by the time you got to the end of the century, if you lived that long, you could buy 50% more than you could at the beginning with the same money. That is a great system, but we don't have it. That's not market structure.
No, it's not. It's Tim. I want to get, and there's not too often where I'm thinking about the markets, I'm thinking about the show, I'm doing my homework, and I'm thinking, wow, what a week we have coming up.
Yes.
And I think about, the setups and the scenarios. Not very often do I get an email from our guest saying why this week is possibly the most consequential one this far in 2023. Tim.
That's a good setup, Joel.
It is a good setup. Holy mackerel. I mean, I'm not going to be able to sleep all week. Come on, let's talk about it. CPI, PPI, Fed, and Quad Witch. This is it. This is it, the week. Okay, go ahead.
This is the pre-market prep equivalent of let's get ready to rumble in wrestling.
Really, eh?
That's what that was. So for those who aren't reading everything like we are. So you probably do the same, but whether I like it or not, I read Bloomberg, Tab Forum, Wall Street Journal, everything, right, to keep up on what's occurring. This week, there are, well, of course, there's the Fed meeting, Fed Open Market Committee meeting. So there will be a press conference and a decision, probably nothing, but it'll be interesting to see what they have to say and how the market responds to that on Wednesday. Thursday begins the June options expirations period. Friday is S&P quarterly rebalances, round 3 of the annual Russell rebalances, which, by the way, that's why the Russell 2000 took off. Back on June 2, the reason all of a sudden, wham, the Russell took off is because that's when the rebalance started. June 2, it continued last Friday, and it's already done because it's less than 5% of overall market cap. Doesn't take long. But if you rebalance, wham, it hits that small part of the market, 2,000 stocks, but only 5% of market cap.
Yeah.
So all of that's occurring. And you've got NASDAQ. NASDAQ runs hundreds of thousands of indexes. Those are rebalancing. All of that is occurring as we come out of a period where ostensibly we have come out of a bear market, that we've returned to a bear market. Plus, there's this. In the last week, we saw the greatest outflows in 10 weeks, tab forum, from equities. If you look at ETFs, Wall Street Journal, less than half of ETFs have seen inflows, 44%. If you look at the overall ETF complex, we're creating and redeeming at the lowest level since 2019. We have given back all of the ETF bubble in flows. And yet here the market is way up. Well, how can those things be true?
How does that add up? And this is, I saw this over the weekend too, people talking about the outflows into, and not money coming into the markets, yet the market continues to go higher. The reason, I think a main reason why, you're not seeing these big inflows is the TINA trade. It's dead. There is an alternative, and it's cash, and it's 5% here right now on treasuries. So there's a lot of, maybe older people who are like, well, I don't have to chase return. I'll just take my 5% and not worry about the markets. I think that's why it's not coming in. But why do the stocks continue to go higher if there's not inflows coming in? Like, it's not big money driving this then.
Well, then it's like the old Sherlock Holmes adage that when you eliminate the impossible, whatever remains, no matter how improbable, is your answer. And I'm going to answer it this way. So I saw a little clip from Mark Rowan, who was on CNBC last week. He was at the Economic Club of New York. And Mark Rowan is the CEO and co-founder of Apollo. So very, very large private equity firm. And he said, it was fascinating. In fact, it was so good, I paused the TV, grabbed my phone, backed it up, and recorded it, which is, of course, a violation of copyrights, but I wanted that little clip. And so he said 60% of the market is ETFs, 80% of the volume is the S&P 500. There is no alpha left in public equities. He said it hasn't been there for 20 years. He said you can buy beta, the movement of the market. I call that the wave of the market that carries all the boats. He said you can buy beta for 6 basis points. How do you know? Because that's what you pay for a passive vehicle from BlackRock or Vanguard or State Street. It's 6 basis points. He said you cannot beat the market. We are all levered to 5 large growth stocks and the Federal Reserve. So there's number one. There is a small concentration of equities that carry most of the market. Then if you add in this ETF piece, it is principally market makers arbitraging. You will arbitrage something up that is trailing the market. And if you can make a penny at a time, it's fine. I do think that means necessarily that there are arbitragers who are losing and arbitragers who are winning. But it establishes a fundamental point to me. And it's very important, traders, this is why we talk about this. Okay, what is the value of edge to you, the platform we offer? Well, among other things, it does deliver alpha. But alpha cannot be had by simply doing what you've always done. You will have to do the things that the people who are making money in the market are doing. And they're looking for supply-demand imbalances. And I'll show you where those are. And then number 2 and 3, it will show you the behavior responsible for moving the market. And it's going to show you where the money is going. That can change very rapidly. But all of those things are very valuable if you're a trader. I'm going to show you a couple of things. That's my answer, Dennis.
Let's get to the good stuff. Let's see the data. The data. It's all about the graphical representations, right? Let's get to the action.
Certainly I'm a data geek and I love to look at the data. So when you're this screen,
and I know you're an art guy too. I mean, I see it over the corner, right?
Exactly. Oh, absolutely. Good. If you're good with data, you can buy art. So, the two go together. Here's the thing. So what you're looking at, this green and gray parts of the graph, demand, it's an algorithm. It says, let's look at all the purposes behind trading and investing. And and calculate their effect on prices. It's a 10-point scale. So I'm going to look at what I want to find is where is it rising? Where's demand rising? And this is supply, short volume. Short volume is the data set associated with the modified uptick rule. 2010, the SEC handed down some regulations. FINRA created a data set to track that called short volume, not short interest. Look, we track that too, but it's a 1974 measure. It is not relevant to the way that stocks are priced today, but this is. So when those diverge, that's where your opportunity is. If you short the market, then you want to find where they converge. And look how weird this is. They're not converging. That is very strange. I have only seen that 1 or 2 times ever. I just run a calculation that looks for supply and demand in a certain relationship. The supply side is very high in this group. It's almost 80%, but the demand's rising. Weird. That is arbitrage, and who's responsible for it? Quants. Passive money is doing that. That's global macro money. But you can see this. You can look and say, well, is there money going into AI? Well, there has been. Look at this immense demand scale, but it's coming down. The supply side's coming down too. So AI is not going to fall apart. But that great momentum that we had in NVIDIA is coming down. And so you should know that so you can reduce your exposure to things that will no longer give you the kind of gains that NVIDIA has.
Well, look at and go back to the momentum sector. And this is probably the first time we've seen financials, the leading sector in momentum. Like, what's up? I kind of like the value market. I hope it stays for a while here, but what's up? Financials.
So let's go look at the financial sector. We can scroll down and we could even dig deeper into this. But see,
let's do it.
There it is. Financials have rising demand, and we had this big supply divot last week, but it's turning.
It's selling.
It's how sustainable that is suspect. When this happens, you get 2 or 3 days of gains in your momentum trades. And then it falls apart. And guess what happens in 2 or 3 days? Fed meeting, options expirations, index rebalances. And Joel, that's why this is the most consequential week of the year so far. We've had a great run. And now everybody's going to sort out. Are we still tracking the index? Is our assets balanced properly? If we look at the model we're trying to track, are we following it? What is our risk reward equation? Should we have insurance? All those questions are going to get answered in the next roughly week to 10 days. And so if everybody says, now we're good, then nothing will happen. But if there's an adjustment, wow, we could have really consequential outcomes. But yeah, financials, I mean, it's kind of crazy. So that's one place money is going. It's very interesting.
Catch-up trade. Catch-up.
Well, we see this with the IWM here too, which is heavily weighted smaller companies. Financials have a heavier weight in there. And we've seen this over the last 4 or 5 days. We've been talking about this. It's why I've turned bullish, because I'm seeing not just being led by 6 or 7 companies. I'm seeing more broad-based buying here right now.
That's what we wanted.
But again, to Tim's point, so many things, data points coming in this week. Does the rug pull happen here?
Exactly. And what's the reason? I always think that that's very important. What is the reason that these things are occurring? Why is it more broad-based? And I think that it's underappreciated the role that index rebalances have. Remember, I've done this before, but take the 7 largest money managers in the United States: BlackRock, Vanguard, Fidelity, State Street, UBS, JP Morgan, Morgan Stanley, $42 trillion of assets. And 70% of those assets follow models. Well, they're making adjustments. And so we can misconstrue what the market is telling us. We can look at it and go, oh, well, everybody's bullish. No, they're trying to get everything sorted out because they haven't done it this year. They didn't do it at the March expirations period because we were in the middle of this banking crisis. People did not true up their tracking. Now we're halfway through almost 2023 and nobody's trued up their tracking. I bet the regulators have given them some leeway because of that, but you got to be there. You can't be selling a fund that says it tracks the S&P 500 and you're not tracking it. Yeah. So that can lead to a misconstruction of the motivation of the market. So be very careful, people, not to get caught out in that. That's it. You got to be aware of these risks in the market.
And that's why, on the show, sometimes I talk about the ETF effects, which are so significant and understated by the overall market because they don't understand it. And I mean, it's all just, like I've got this trade, and I've talked about this with you, Tim, where you see, on those days that Meta reports or you get Apple reporting or Microsoft reporting, and they blast off. And all of a sudden you start seeing stocks, like Procter and Gamble going down, or you start seeing, Pepsi going down, Comcast going down. It's like, well, why are these stocks tanking? Well, you got Pepsi and you got Comcast and you have 20 other stocks. Procter & Gamble, not one of them, but you have other stocks that are part of the queues. Exactly. And if they're buying this tech-heavy part of the queues, they're going to sell the non-tech components of the queues, which is absurd that Pepsi goes down because Microsoft had a good quarter, but that's the kind of market we're in.
It's a very good point. Trend followers do that. And most of the time, money is fully invested. So if I decide, we need to buy Meta, I'm going to have to sell something to free up cash to do that. And that's what's going to happen. You're going to see the lower volatility value plays decline. And it's not because people don't like them. It's exactly what you're saying, Dennis.
Awesome. Like always, guys, you guys can check out Market Structure Edge. Take gains, not chances, right? We'll see what happens today. And of course, it feels like that's the type of market we're in right now. We'll have to find out. You guys can get 30-day trial. There you guys see it. Market Structure Edge. Just threw up the link in the chat. We'll get you on over. Like always, you guys can also check out Tim Quast on Twitter. He's always active, and definitely check out his webinars if you guys want to learn more of how you can be using Market Structure Edge. Have a good one, Tim.
You guys too. Thank you.
Thanks, Tim. We'll talk to you next week.
All right, let's get to the markets. How we looking right now, Joel? Are we still a little bit on a leak here?
No. We're steady Eddie here, up 12 1/4 handles, 43.61. I mean, they tried to bust us down a little bit, but I just want to show you guys and gals here on the dailies. I mean, there's not much here. You got to go back a while, right? I guess your next stopping point would be in the this is the front month contract ES. I mean, we're past 44.30. We're past this area here. All these tops above 4,400. We're in the area of light resistance after we took out the highs from the prior week. So keep an eye on that. What do we got? We got 852. Dennis, anything looking? You seeing much in the stocks? Anybody?
We're gonna go. Let's go to the TradeZero. Let's go to the TradeZero segment here, because that shows us the big gainers, big losers, and it shows us some stuff that sometimes that we're not looking at.
All right, let's go to it. All right, at the top, I do have one more news that I wanted to touch about Novartis to acquire Chinook Therapeutics for $40 a share in cash. And you guys see KDNY moving up on that. Of course, Chinook Therapeutics getting a nice little lift with the potential to receive an additional $4 per share. So right now, the stated price is $40, but it could be all the way up to $44 per share. So we'll see what happens right now at 37.90s. What do you think about this, Dennis?
Again, and we give these core strategies, that I employ in my day trading, and how I, make money over the years is just finding alpha in little ways. And what I've been doing for a long time here is being long XBI into the weekend. Why? Because these deals usually get announced on a Monday. And if you get, one stock in the XBI, which is equally weighted, getting taken over, which we're seeing here this morning, the XBI will have an oversized move here. And that's exactly what we're seeing this morning. XBI is trading up 1.11%. You can say, what's 1%? Well, I mean, on these types of trades, you can put on bigger size. It's an ETF. So, you never know which stock's going to get taken over. But a lot of times on the weekend, we see one or two takeovers here, and that drives the XBI up. So again, the trade works once again here, being long Friday XBI, taking it through the weekend, making 1.11% here works again. KDNY, the trade is over, obviously, so smaller companies, so it's probably not even going to have a big effect on the acquirer here. But, you're getting a big move here, so congratulations to the direct owners, KDNY. I believe Shark Biotech, great follow on Twitter, Dan Rosenblum. I believe he was long it. So congrats, Dan.
Why you like the XBI? I'm trying to think of the name of the other one. Is this the one with the smaller
XBI
one?
is the small cap, the small biotech.
So
IBB is the bigger stuff.
Yeah, that's what I was
thinking. So that's why I stay away from the XBI, the IBB. It's the XBI focus on that one. There's some other smaller ones too, but I go to the liquid ones. I like the liquid ones that trade with like 2-cent spreads or 1-cent spread. So XBI is widely traded, huge volume. So you got basically those two, IBB, the bigger ones, the bigger biotech companies, your Biogens, Amgen, the bigger ones there. And XBI is smaller companies equal weighted. So if there's a takeover in the biotech sector, the XBI likely benefits. over the IBB. There's probably a trade, Joel, just thinking out loud here and never really thought, is to just go XBI long, IBB short on Friday night and taking it over the weekend there, because sometimes the bigger biotech taking over the smaller biotech.
I know. I just
So
was
Mitch
thinking
is, that's the one I like. Don't tell that one. We give some strategy.
Talking too loud here, Dennis. You're talking too loud.
That's the exact thing I was thinking. Oh, well, if Biogen takes over.
Yeah, like
well,
let's look under the hood here and, just look at, the ETF and look at IBB. And we can just see the biggest components in the IBB, and it's those big guns. Amgen's 9% of the IBB. Gilead is 6%. Vertex 4.6. Regeneron is 4. Biogen 3. Illumina. Moderna's still up there. And then you go to the XBI, and that's all small stuff, and it's equally weighted, so it's all small. So if we go into the XBI, actually it's not, well, they try to equally weighted, but they quarterly rebalance, I believe. So you do have Immunogen, which may get taken over, but it's a bunch of 1%ers. So you're getting like, boom, over the weekend, you're getting exposure to all these companies. How many's in there? Oh, man, let's look how many's in there. There's a ton
ETF effects, man. And I think there are things that you got to learn from. Dennis tries to talk a lot about different areas here for you guys
little
to
strategies,
learn about.
Little alpha generation.
Little alpha.
There's 150 small biotech companies in the XBI, 150 of them.
Pay attention to that. Maybe learn a little bit more about what Dennis is talking about. You definitely might be able to find some edge there. You guys are seeing he's bringing up a trade. Doesn't mean you guys got to take that one. But take the structure of that. Understanding why he's going about it is so important here.
We're gonna write that up.
I'm taking the weekend edge. They usually get announced on Monday, so I'm taking the edge. It works again. We've talked about this for a long time. We've talked about this strategy, and it doesn't work every weekend. But if it works 55% of the time, probably makes you money.
All right, what else does TradeZero have for us?
AVGO shows up here, of course. This one's been going sideways here. Has started to get a little bit sleepy, but at least got news there that most likely to receive EU approval for the 61 billion VMware merger. This report came out throughout the weekend by Reuters. So Broadcom likely to get approval here.
I'm going to say this one's hooking. This one's looking pretty good. The one problem is taking trades ahead of the CPI. So, does it go today maybe? Do I want to start a swing trade ahead of Tuesday's CPI data? Probably not, because it's still a crapshoot. If it comes in hot, they'll hammer everything. So I like the chart here, AVGO. I think the AI story continues. I think the valuation on Broadcom has always been too cheap. I mean, where is this thing now? It's come up quite a bit. But if we go to our trusty Benzinga Pro here and go into the details and look at where the PE is on the AVGO, we will find the current PE is 25. The forward PE is only 19. So you're talking about a potential AI play with a market multiple. If you go back to like 3-4 months ago, forward PE is like 15, 16, under a market multiple. So it's come up to a market multiple. But one thing to keep in mind is Broadcom is still cheap.
You're getting a pop off this, and 8.13, so you're up $8. I mean, you settled on the lows of the session, so I think you're going to find sellers into this. Just trading around the 8.13 area. I'd really like to see it. If this is like the good news that you think it is, I think you should get a look at 8.1775, and then you got another double top at the 8.22 area. So I'd be looking. I'm a little bit more of a fader on this one, because I still think people are licking their wounds from that day when it went to 921.78, and just going right back. I just went real quick on the kidney there. Man, oh man, it popped over 40 and it's leaking. I don't know if I'd be like super concerned about the other $4 at 44. You know how these deals are. A lot of times you get the official pops and then things happen and it withers away. So keeping an eye on that pre-market high, just over $40 there in kidney.
All right, we're going to start wrapping it up here, team. Of course, you guys can check out the inventory of short locates for TradeZero. Just threw up the link there. We're going to wrap it up on the markets. What are you seeing, Joel and Dennis, as you guys wrap the day? Or at least
quick and balanced look. Oracle, 106,000 to buy. We've talked about that already. Reports earnings tonight, has the upgrade as well, which is driving the price here. CCL, 245,000 to buy. That's getting driven by an upgrade here as well. So ratings are driving prices here today.
For me, you're high on Friday, the high of the move, the highest you've been since August of last year, 43.6950, hit 43.67 in the pre-market. Folks, when I tell you there's no resistance after that, there's no daily resistance. So let's see if we can take out that pre-market high. All right, everyone. Great to be back. I hope you missed me as much as I missed you. And Triple D, I'll talk to you at the top of the hour. Everyone have a great day.
Stick around here. We got the Qualcomm segment here coming up here right now with Tachi interviewing. It's going to be good. I'm going to be watching. So I'm sticking around.
Tune in, Dennis. I'll put you in the background and I'll get us going here. All right, so get ready, team. Are you guys ready? We got a great interview for you guys coming up right now. Get ready for the next big leap in AI. Join us for this exclusive interview. Starting up, the head of AI business at Qualcomm. We got Ziad Asgard as he reveals the secrets behind the groundbreaking AI innovations.
To Benzinga, the channel that brings you the latest and greatest in technology and investment opportunities. I'm your host, Chris Ketchy, and we have an incredible interview lined up for you today. In today's interview, we'll dive deep into the secrets of Qualcomm's AI revolution and uncover the next big thing in tech investment. Our special guest is none other than Ziad Asgard, the visionary driving Qualcomm's AI business. He'll be sharing exclusive insights and knowledge that could supercharge your portfolio. So buckle up and get ready to be informed, inspired, and empowered. Benzinga is your ultimate guide to navigating the ever-evolving world of technology and investment. Let's jump right in and discover the future together. So I'm here with Ziad Asgard, the Senior Vice President of Product Management at Qualcomm and Head of AI. I want to get the questions started with the big topic out there, generative AI, a phrase that we are hearing a lot in the world. So Ziad, what is Qualcomm doing for generative AI?
Yeah, Chris, it's an amazing opportunity for Qualcomm in terms of what we can do on all the different products that we have on our portfolio with generative AI. I mean, the scale that Qualcomm brings is just amazing, right? So we have about 2 billion devices that are out there at any given point in time with Qualcomm chipsets in them. And we believe that with the special hardware, software, and the tools and algorithms that we have been working on, we can bring these amazing experiences onto those devices. And I think the key part that we really like with generative AI also is that we can do a lot more of that processing. We can create those amazing experiences, those unique use cases, all of them entirely on the device. And the way I think about it is that as we start to do that, it will actually move the center of gravity of generative AI towards the edge. And in doing so, it actually allows us to take those experiences to all the different consumers, everybody who has a handset, has a PC-like product with Windows on Snapdragon, has an XR-like product. All of those are now going to be able to use those capabilities. And we are also very excited because I think each and every experience on our devices gets better. It becomes something a lot more immersive. It becomes something that people enjoy a lot more. There is entertainment aspects to it. There's productivity aspects to it. And then there's just convenience aspects to it that we think that the generative AI is going to bring across all of our product lines.
Awesome. Now, while generative AI is the term we probably hear the most, there's also a term that I've been hearing Qualcomm use that's hybrid AI. So can you kind of walk us through what hybrid AI is, how it's different from generative AI, and why Qualcomm is excited about that part of the AI field?
Yeah, so like I started, let's say you're doing a chat session, right? So you're asking a particular query. If we can do that entirely on the device, it means that that query never left the device. It means that your privacy is preserved. So some of the concerns that we have seen from different aspects about confidential information from companies going out and all of that can be preserved by doing a lot of that on the device. And why we think that Qualcomm is uniquely differentiated is because of the hardware, the software, the tools, and the algorithms that we have built. For example, we built capabilities to be able to take these exceptionally large models, right? A measure of how large they are is the number of parameters. So some of these models are in the billion. What we showed at Mobile World Congress is a 1 billion parameter model that we can run entirely on the device. And the unique part is the device is in airplane mode, and it's doing all of that entirely on the device. We believe that in the coming months, we'll be able to actually push that all the way to 10 billion parameters, which means you can think of it as that 10x improvement in terms of what we are able to do, which means things like these chat experiences, things like code generation, things like image and video and text generation, all of these are able to run entirely on the device. And the really unique part that also comes by doing it on the device is that you can actually bring in context, which means the device knows far better the colors, the tunes, the textures, the themes that you like. And then we can actually curate an experience for the consumer. And I think that sets us apart in a very big way. But then there will be models always that are larger than that. There are models that are going to be larger than what we are able to do on the device. And for that, we're working actually very closely with multiple cloud partners to be able to do the hybrid AI approach. And what that means is that the portions of the model that are more specific to privacy, for example, we can keep them on the device. And then the other portions or remaining processing can happen in the cloud. And that really allows you to be able to offload the work from the cloud onto the device in a very meaningful way. And the point I would want to make is Chris, that we do these models entirely on the device, and we use milliwatts of power. When people are running some of these in the cloud, sometimes they're running hundreds of watts of power, right? So our pedigree has always been about doing these at the lowest power possible. So we are bringing a lot of advantages in terms of just environmental and other benefits too when you can do it on the device. But when there is a need, we can go off to the cloud, and that's where we create the hybrid angle to be able to still provide the pristine, the best-in-class experiences that are differentiated by doing it on device and then extending it all the way into hybrid AI.
I love that explanation of hybrid AI. And again, maybe viewers and listeners out there aren't as familiar with that topic. We hear so much about generative AI, and we also hear a lot about how AI is going to scale in the future. Can you just add to that on how the hybrid model maybe helps the overall AI market complete that scaling effect that everyone's calling for?
Absolutely. I can say that quite openly, that every day in our space, something new is happening. And so this started, of course, with what, for example, we showed on the device, which is a stable diffusion model, which is, think of it as a text to image. So, you can put in any query onto it and it generates an image for it. So for example, you say, I don't know, Eiffel Tower at sunset, but done in Picasso style of painting. And actually it's able to generate that for you, right? Entirely on the device. And so now that was text to image. But what we're seeing is that you'll have a lot more modalities coming into these experiences. You will have text to image, you'll have text to video, you'll have image to text, you'll have image to video. So it's really becoming multi-model, which means it's X to Y. And all of those configurations are going to be possible. And I really think that we're just really looking at the tip of the iceberg at this point in time. It's going to be a lot bigger. The applications are going to be a lot more. So what we are seeing is, multiplicative effect. Number one, you got, 10x increase in the number of use cases. You got 10x increase or not, if not more, in the size of the model. And then you got 10x increase in the number of people actually using these. And, that is what is causing the need for generative AI to run on the edge or on device, right? I always say that generative AI, to reach its full potential, needs the edge, right? Now, of course, all these new experiences will come in. But as we see that some of the times the models start at a fairly high level, they keep on getting optimized and they become smaller. But there are some models that are going to stay fairly large. And I think in that case, what we are looking at is basically almost like a student-teacher sort of an approach between models, where a smaller version of the model runs on the device and a much larger version can run on the cloud. And then the interaction between those two reduces the total amount of AI processing needed to be able to deliver that experience onto the device. So I think it's really a great win-win. It allows the experience to stay constant, independent of the capability of the device, but at the same time be able to deliver all those great and amazing use cases.
Love it. So Qualcomm CEO Cristiano Amon wrote an op-ed piece recently, and he said that AI is going to touch every corner of our lives. So Ziad, I'm wondering what your thoughts are on this and how you position Qualcomm to win the race in all these different corners of our lives.
No, I think Cristiano was right on the mark over there. I think this generative AI transformation that we are seeing today will indeed touch all industries and touch all aspects of life, right? So I'll just talk through some of the use cases. For example, right, today, I have one person on my team who writes perhaps really long emails. Well, generative AI can summarize that for me and be able to give me a much smaller snippet. I can have a conference call like the one that I'm having with you today. It automatically transcribes all of the stuff that's happening, creates a summary, creates all the actions that are coming out from it, and actually shares it back and creates a PowerPoint slide or a presentation that essentially talks to all the things that were covered in the meeting. For example, if you go to augmented reality and virtual reality, the key differentiation over there is to have a virtual world that actually is reflective of what you like, but at the same time is unique to your likes and dislikes. In this particular case, with the information that you already have on the device, we create a genuine, differentiated world for you that is available on the device, and we are actually able to bring in text to 3D is another big thing that's coming. So you can actually create these objects that are entirely created using generative AI, for example, right? So all of those kinds of experiences. And then, for example, in IoT space, you could be traveling to, some country, some different country, and you can have basically your concierge sitting in your room where you can go and ask it, well, hey, I have 4 hours in the morning of free time. What can I do? And you can actually have a conversation with it, and it's able to tell you exactly where you should go, what you should do. And if it's on the device, it actually knows what you prefer anyways and be able to do, mold it that way. Similarly for automotive, right? I mean, I can talk about it forever. So all of those experiences are being touched by generative AI. But the unique part is that Qualcomm, we feel, is really differentiated because the hardware that we have created and the software that we have created, we call it the one technology roadmap, which we're able to take to all of our different product lines, from handset to PCs to XR to auto and all of the other ones. But in doing that, we're able to do more AI processing than anybody else out there for a given amount of power, number one. Number two, some of the experiences that we are showing, we believe we are the only ones showing those on the device because of some of those choices that we have made. For example, one of the fundamental choices we made was to be able to do what we call AI inferencing in the integer domain. What do I mean by that? What we are able to do is to do some of this inferencing in 8-bit domain. So you have to do 8-bit calculations to be able to get a result or generate an image, for example. What some of the other people are doing, they're doing it in the floating point domain, which is 16-bit or 32-bit, which means it takes a lot more processing to be able to get that result. But the techniques that we have developed over a decade of research in AI has been how to do that without losing accuracy, without losing the best experience. And that's why we are very excited about it. And that's why we think Qualcomm really has a unique differentiation over here. And as AI and generative AI touches all those areas, Qualcomm will be very uniquely placed to take advantage of it.
Ziad, I want to follow up on the automotive segment, right? We've heard a lot about Qualcomm really seeing that growth in automotive, right? The connected car, the digital cockpit, and the assisted driving technology that is really powering the world forward in the auto industry. Can you just give us some examples of how AI is being used within the auto industry for Qualcomm going forward?
By the way, AI is already being used heavily, like you point out, right? I mean, if you are to have any degree of driver assisting in terms of how the driver is driving through, you need to be able to understand exactly what is on the road. So you have to have best-in-class camera technology. Qualcomm leads that. I mean, if you look at some of our cameras that we produce on the smartphone side, they're best in class in the world from a quality perspective. But the way you do a camera for a smartphone is fairly different from the way you do a camera for an automotive, right? The camera does not need to make you look good, but what it needs to be able to see is in the darkest of the regions of the frame versus the brightest, it should be able to see that pedestrian. It should be able to see that line marker. And I think those are the things where Qualcomm really excels. But when you combine that with AI, it's able to do that object identification. It's able to take multiple sensors like LiDARs and radars and multiple cameras and be able to create this bird eye view of where the car is at while realizing and recognizing each of the things and impediments that are in the way of the driver. And that's, of course, helping the driver be able to do a much better job, making the experience much safer, and we hope really saving lives in the long run. But what generative AI does over here is, for example, you are going on a ride and you can basically talk to your car perfectly like, I guess, Knight Rider-like days almost, right? Where you can talk to your car and say, well, I'm going to the airport, but I really want to stop somewhere and have a nice pizza. So what do you suggest and what's a great place to do that? And you can say, I'd like to grab a good good cup of coffee after that and then get to the airport. And, you can have all of that seamless experience. You can also have integration. I mean, I'll tell you, I'm driving in the morning and I have 3 or 4 ideas in my head that I'm thinking, hey, I need to meet up with these guys to be able to, discuss this further. I should be able to talk to my car and be able to have all of that scheduled. Even the routes that a car takes based on generative AI, we can do a far better job of actually being able to create the better routes. So I think all of those things are going to make the experience on Qualcomm-based automotive products far better with what we are able to do on the device.
Love that. Thanks for that explanation. The auto industry, with AI already being prevalent there. So as the AI market grows, right, a lot of analysts and experts are trying to quantify it, right? And we hear a lot that it's $1 trillion opportunity. I mean, Ziad, that's a massive number. So walk us through, what does this opportunity mean for Qualcomm when forecasting, future revenue, future growth? How does Qualcomm tackle this $1 trillion industry, and what could it mean for financials going forward?
I think the way we should think about it is, right, this is a great opportunity for the whole industry. It's this really transformational moment. But I think the way I think about it, Chris, is that we are able to do these experiences far better and on more product lines than anybody else that I know out there. The scale that Qualcomm brings is far more than anybody else. We can bring these generative AI experiences to the masses. We can bring it to every product line that we have. And with the differentiated technology that we have created, we can actually run it at the best power possible as well. And I think those things mean that we are squarely in the middle of how the generative AI revolution is going to move from here on, which means we are a key part in terms of actually making those use cases real, which means that essentially every product line of ours becomes more important, becomes more significant. Its value increases. At the same time, the consumers like it more. They buy more of those devices. So whichever way you think about it, Qualcomm is in the middle of this revolution and at the same time very well positioned across smartphones, XR, PC, auto, IoT, all the different product lines that we have are going to benefit from this in terms of the growth that we will see due to these amazing use cases.
So I want to talk about an effort with Microsoft to align efforts to scale device AI. We know that Microsoft is a leader in the AI space. They have an investment with OpenAI. Talk about this relationship and the news that was recently announced between Microsoft and Qualcomm.
Right. So Qualcomm and Microsoft work together very closely. They're a great partner to us. I think with the revolution that's going on the PC side today also, it's all about devices that can launch basically something extremely quickly, which means have great performance, but at the same time last through the whole day. And we have the right technologies to be able to do exactly those, to deliver those experiences. And what is happening now is that Qualcomm is truly, again, very much differentiated by virtue of the fact that I think people don't realize this, but we actually have an AI accelerator already built in to all of our chips that go into the PC space. This is not a separate chip. It's already integrated into our product lines, which means that all these generative AI use cases that I talked about, Chris, now can actually come onto products like Windows on Snapdragon. And in that vein is where we are working with Microsoft to be able to bring those experiences to life. I mean, there are very simple things. For example, people always complain. If you look at the camera on your PC, it looks like you're looking down. And it doesn't look like you're looking at the person. Well, you can do gaze correction, right? At the same time, all the things that I talked about, transcription, about being able to have a conversation like this, whereas the people could be speaking very different languages, but on your end, you're actually seeing the right language, right? All of those experiences of how you are able to create, for example, a complete transcript, but also create a summarized output of a meeting that you might not have even been there, right? All of those experiences are what we're working with Microsoft to bring to the device. And then on the productivity side, on what you can do with text generation in terms of creating Word documents, or to be able to create PowerPoint slides that are essentially taking the data from meeting notes, but from meeting notes that you might have created and automatically create those for you. I think the productivity aspects are just going to be amazing. It's going to take away a lot of the mundane work. It's going to really accelerate what we can do on the device. And those are all the angles working very, very closely with Microsoft.
Awesome. So Ziad, within the AI industry, within semiconductors and many of the industries you compete in, obviously you have a lot of competition. What are some of the key differentiating things that set you apart from competitors? And a follow-up to that is Qualcomm looking towards merger and acquisition activity within the AI space currently?
Yeah, so I think if you think about what sets us apart, I think we are very happy with the choices that we've been making. Actually, my team, even 5 years ago, right? The focus on doing this in the integer domain, like I talked about, where people have still been using it in floating point domain, automatically means that you can do some things on the device, that Qualcomm can do some things on the device that others who might be leaning more towards floating point approach may not be able to do, number one. Number two, we created and launched what we call the Qualcomm AI stack last year. And what this stack does is that essentially you can create a model once and be able to take it anywhere. So let's say you created a great object identification model or a nice text-to-text message, text-to-text model. You can take that from the smartphone space to the IoT space, or you can take that to the auto space or to the PC space. That portability is what we have created as an inherent advantage of the way the Qualcomm AI software is done. Additionally, what we have basically launched is what we call our Qualcomm AI Studio, which has all the tools, all the pieces to be able to take, let's say, a floating point model, quantize it, compress it, make it small, and be able to bring it onto any of these products that we have. Works basically locally for Snapdragon. I think all of those advantages in each and every vector, and then we have a lot of research where we're looking at how to be able to accelerate the large language models, how to be able to accelerate these large models, even for vision and for image and other aspects, even further. And all of that is basically baked in to the Qualcomm AI Studio. So we think with the investments made, the technical choices that we have made, it really gives us a huge advantage. And I think that sets us up extremely well for being able to do well in this space. I think you had a second question to that. I forgot.
Yeah, any interest in acquisitions within the AI space for Qualcomm?
Thank you for the reminder. So basically, we have already been looking at that quite closely, Chris. We have also already done some smaller acquisitions already, smaller teams, because I think what I'm looking at is where we have a particular need in terms of technology or capabilities, we are able to pick the right folks and be able to bring them into the team. So we've been doing that, and we'll, of course, continue to do that, as you'll see us do a little bit more of that in the future, too.
Awesome. Well, that brings us to the end of another exciting interview from Benzinga. We hope you enjoyed our deep dive into Qualcomm's AI revolution and the incredible insights shared by our guest, Ziad Asghar, head of AI. Remember, the future of technology and investment, it's constantly evolving, and we're here to keep you informed every step of the way. Be sure to subscribe to Benzinga so you never miss an interview filled with groundbreaking discoveries and investment opportunities. Thank you for joining us today. Until next time, stay curious, stay informed, and keep exploring the possibilities of tomorrow. This is Chris Ketchy signing off from Benzinga. Take care, everyone.